Audio Jungle.
Let's join hands with government to make our environment conducive for business to thrive. Good afternoon and welcome to Monday's edition of Business News. I am Ubelijit. The federal government, through the Association of Power Generation Companies, has grown the power capacity of the national grid from 13,000 megawatts recorded a few years ago to about 14,000 megawatts. APGC's Executive Secretary Joy Ogaji, while speaking with newsmen on the sideline of the Association of Energy Correspondents of Nigeria's 2023 Annual International Strategic Conference last week, said electricity generation capacity to the national grid has increased to almost 14,000 megawatts. Dr. Ogaji explained that the increase was brought about due to the addition of a $1.3 billion Niger State-based 700 megawatts Zungeru hydroelectric plant, which came on stream in the second quarter of the year. She said the national grid now has an installed power generation capacity of about 14,000 megawatts, and this was made possible due to the Zungeru plants that came on stream this year. The report says the federal government had in February announced Mainstream Energy Solution Limited as the preferred bidder for the concession of the plant. In a bid to stimulate economic growth worsened by unprecedented rise in prices of goods and services, the Central Bank of Nigeria, CBN, reduced its cash mop-up operation by 82% to 150 billion naira in the 9 months ending September 30th, 2023, from 813 billion naira in the corresponding period in 2022. As part of its money supply management function, the CBN occasionally injects cash into the banking system through the sale or repayment of open market operations treasury bills. According to the reports, the CBN sells open market operations treasury bills to reduce money supply in the economy and with a view of curbing inflation. But when the CBN wants to increase money supply to spur economic growth, it repays the maturing open market operations treasury bills with interest to the banks and the investors. Consequently, the banking system recorded net cash injection of 164 billion naira from maturing open market operations treasury bill in the 9th month 2023, down from 911 billion naira in the 9th month of 2022. Similarly, interest rate on collateralized borrowing fell to 2.7% last week from 2.7% from the previous week. The Central Bank of Nigeria has revealed that Nigeria's external reserves fell by $841.75 million between July and September 2023. Former acting governor CBN Folashodun Shonubi has stated that eventual stability of the foreign exchange market over the medium term will further help to achieve price stability. The CBN revealed in its report on the movement of external reserves that the reserves, which stood at $34.07 billion as of July 7, 2023, fell to $33.23 billion as of October 5, 2023. External reserves fell by $2.85 billion in the first half of 2023 due to external debt finance, among other challenges. The report said CBN had earlier revealed that the reserves, which commenced January 3, 2023 at $37.07 billion, fell to $34.22 billion as of the end of June 26, 2023. According to statements released by the CBN by Monetary Policy Committee members as of July, accretion of external reserves remained weak, while foreign exchange demand pressures persisted. Telecommunications firms have taken their clamor to high call tariffs and data prices to the House of Representatives. According to the telcos, the cost of doing business in the country has risen sharply in recent months, negatively impacting their businesses. The telcos, through the Association of Licensed Telecommunication Operators of Nigeria, disclosed this in the industry submission to the House Committee on Communications. Telecommunication firms highlighted that macroeconomic headwinds such as inflation, currency devaluation, sustained difficulty in accessing foreign exchange at an affordable rate, adding that the rising costs of securing telecom facilities and field personnel in the face of worsening insecurity and more have negatively impacted their business. The Director General of the National Pension Commission, Aisha Dahar Umaru, has stated that the pension reforms in the country started when Nigeria was struggling with a 2.4 trillion naira deficit. This was disclosed in a new book titled Fighting for the Future, Nigeria's Pension Reform Journey, which was published by Cable Books, an imprint of Cable Newspaper Limited. In a statement, Dahar Umaru noted that the revolution Nigeria has recorded in its pension industry cannot be reversed, despite the various challenges and ongoing pushbacks. According to the report, the success of pension reform in Nigeria is an indication that the country has the capacity for change, contrary to popular notions. Dahar Umaru provided the first authoritative account of the history of Nigeria's pension reform, which was launched by former President Olusegun Obasanjo with the introduction of the contributory pension scheme in 2004. In a bid to drive institutional investment from across Africa into Nigeria's capital market, tech company Second Tax and the Nigerian Exchange Limited are in joint partnership. At the launch of the product, it was revealed that the new partnership, which was established in close collaboration with AfriInvest West Africa Limited, will make it easier for licensed broker-dealers and asset managers. The report also said the platform enables investors to invest in their local currencies. Speaking on the partnership, the Chief Executive Officer and co-founder of Second Tax, Eugene Tawai, said their aim is to integrate all the capital markets across Africa to enable more seamless investment flows, and this partnership with the Nigerian Exchange Limited represents a major milestone on their journey. The CEO of NGX, Temi Popola, in his comment, hailed Second Tax for its solution to drive institutional investments across Africa. Following the NGX launch, access to the service will initially be restricted to qualified institutional investors who are able to place minimum trade orders of $10,000 or the equivalent value in Nigerian naira. Stock market volatility continued with the benchmark Nigerian Exchange Limited, NGX, all-share index closer higher, gaining a modest 11 basis points week on week at 66,464.57 points last Friday from 66,362.14 points the previous week. Analysis of the market showed that investors gained 179 billion naira as market capitalization closed last Friday at 36.510 trillion naira from 36.331 trillion naira the previous week. Consequently, the year-to-date growth rose to 29.89%. Further details reveal that the weekly market breadth stood at 1.11x, signifying 40 advancing stocks in comparison to 36 declining ones. On market outlook, analysts at Invest Data Consulting said they expect mixed sentiment to continue on bargain hunting and portfolio repositioning ahead of the third quarter corporate earnings report in the face of sector rotation. Oil prices have jumped on concerns that the situation in Israel and Gaza could disrupt output from the Middle East. Israel and Palestinian territories are not oil producers, but the Middle Eastern region accounts for almost a third of global supply. Hamas' assault on Israel was the biggest escalation between the two sides for decades. Brent crude, the international benchmark, climbed by $2.25 a barrel to $86.83, while U.S. prices also rose. A spokesperson for Hamas, the Palestinian militant group, told the newsmen that the group had direct backing for the move for Iran, one of the world's largest oil producers. Iran denied involvement in the assault at a UN Security Council meeting in New York on Sunday. However, the Iranian President Ebrahim Raisi has expressed support for the attack. And that's the size of our bulletin, as produced by Gift Amadi and supervised by Obiandu Madume. I am Ubiliji Tiara. Thank you so much for watching. Up next is Foreign Tidbits. Stay tuned.